Hello, this is Mark Espy once again with MarketTamer.com. I must remind everybody that everything we speak about here is for educational purposes only, not to be construed as a recommendation to buy or sell anything. Please do your own due diligence. We're looking at the SPX, which is the S&P 500 Large Cap Index, and we had very similar to the Dow, just a very, very bearish week. It began with a spinning top, a lot of indecision, and then a huge down day on Tuesday. We had a follow-through day on Wednesday, and this was closer to being a classic hammer, a very small wick to the top side, but still very, very, very bullish type of a candle pattern, especially showing up at the bottom of a trend as this one did. Yet today we put in a spinning top type of a pattern showing more indecision. You notice here that all of these sessions here are hugging the lower line to the Bollinger Band, which is really pushing the limit in terms of the speed of the movement to the downside. As they say, when you go down it's like an elevator, when you go up it's like an escalator. And this certainly is just like an elevator shaft down here. We did have a wick to the downside, but it didn't look nearly as symmetrical as what we saw in the Dow when we had that tweezer bottom. Yet the message is that it is rejecting some lower price levels. There is buying pressure at this level. If we continue to the downside, what I would be looking for is 975. There's a swing low from August 2009. If it breaks through there, 950, there's a double top on a 5-year chart actually, and that's a January and June double top from 2009, and then there's a level at 875 as a swing low from July of 2009. Then there is a little bit of a shelf at 800, and then obviously all the way down to the March low of 667 from March of 2009. It's also interesting to note, I pulled up a monthly chart, and we are forming a hammer on the monthly chart, which is a bullish signal. Now, we combine that with seemingly some conflicting information here, where we're actually getting a crossover as we speak of the 50 simple moving average over the 200 simple moving average. It looks like we're in an oversold area here in the stochastics. Looks like it wants to cross over. If it does, it may come back up above the 20 area, but we are in an oversold area. And the MACD shows continuing momentum to the downside, and that's expressed with the histogram moving further away from the zero line. If we do happen to come back up here, the levels that we want to pay attention to are 1130 and this swing high, about 1175 from this swing high, and up here around 1220, which is the April 26th high. There's also a swing high from back here in January at about 1150, and then this February low here essentially lines up with this double bottom right here at around 1040 to 1045. My particular feeling is that we are going to maybe languish here a bit, but I think that the down move is going to begin to run out of steam, and we may begin to move sideways and then begin to come back up again. Okay, we're going to move over and take a look at the comp Q.